What's up, everyone? So the short answer to the question is no. If you clicked on this video based on the thumbnail asking, should I sell my stocks because of the election? Again, the short answer is no. I want to be respectful here of your time on YouTube. So if you just wanted to quickly know the answer, there you go. Do not sell your stocks. If you want to stick around, I'll go through the 3 pieces of evidence that justify my answer for not selling your stocks because of the election. So stick around and I'll quickly go through those 3 points for you. Also, at the very end of the video, I have a bonus. I wanted to share my thoughts on a stock that I've been following for the past 9 months. I think it's currently undervalued and it could be a good investment for you. Even if the stock doesn't go up right away, it's paying a huge dividend of 12%. So again, you're going to see a really nice payout with this cash dividend, even if the stock doesn't go up right away. So what I mean by dividend is if you invest $10,000, you are going to collect $300 each quarter. So at the end of the year, you will have made $1,200 based on this quarterly dividend that this stock will pay. And you can use that money any way you want. It's actually real profit that you can collect. So if you're still with me, I appreciate you. Let's jump into evidence point number 1, supporting why you should not sell your stocks. So if you're like me, it seems like every time you turn on the news, you hear or see headlines like Dow Jones had its worst day since June, or stocks are heading lower, or my personal favorite, depending on who wins the election, your stocks could go up or down. So to put everyone at ease, let's start with the real evidence. And I think this headline from CNBC sums it up perfectly. In the long term, history shows that there's little difference in market returns based on which party is in the Oval Office. So it's pretty self-explanatory. It doesn't matter if Trump or Biden wins the election, the stock market is going to continue to go up in the long run. And let's dive a little bit deeper here into this. Here is a nice graph from Forbes that shows the growth of $1 if you invested that dollar in January of 1926 all the way to December 2019. So key takeaway number 1 here, almost all presidents in their terms saw the stock market rise. And this is bipartisan, so it doesn't matter if it was a Democrat or a Republican president, the stock market went up. And this graph also does a nice job explaining point number 2 for why you shouldn't sell, and that is the US stock market trend overall is going up. The market's not flat, it's not going down, but rather it's going up over the long run. It's in an uptrend market structure, so it's going up. So even with stock market crashes like the tech bubble bursting in 2000 or the subprime crisis 10 years later, the stock market has always recovered and gone on to new heights. When you think about it, with COVID-19 in 2020, it seems like actually there's a major correction every 10 years. So you had COVID-19 in 2020 here, you've had the subprime crisis, 2009, and the tech bubble crash in 2000. So even with all these corrections 10 years apart, the stock market overall is up. To maybe give you some better context, if you invested $1,000 100 years ago, today that would be worth $10 million. So think about the legacy you want to leave your children, your grandchildren, your great-grandchildren. So stay invested in the stock market over the long run. So again, with the previous point, it doesn't matter who the president is, the US stock market is going up in the long run. Now, with the last point, I want to talk to you about how the stock market does the year after an election. Now, this table from Fox Business News shows how the market has done when a president gets reelected. So meaning what we could expect if Trump wins, which looks pretty good. But I'm going to take it a step further and build upon this table to show the stock market performance the following year after the past 4 presidential elections. Meaning, what happened to the stock market in 2017, 2013, 2009, and 2005. I think you'll be interested to see that these are some of the best years for the stock market. So again, the point is, do not let the media scare you into selling your stocks just because the person you wanted to win the election didn't win. So let's jump in. Now, Trump won on November 8th, 2016, and here is a view of the stock market the following year in 2017. We see the low point was election day and then a rocket ship right after. Next, we have the year 2013 after Obama won in November 2012, and this looks pretty similar to the last graph with Trump. Third, we have 2009 at the worst part of the subprime crisis. We know how markets do not like uncertainty, and in 2012 and 2016, the low point was actually election day, and then the market shot up. But in 2008, the market went up a little after the election, but then came crashing back down until March 2009. But even with this second dip in the market, it actually ended up higher at the end of 2009. So stay patient. The market was going through a tough time. We had a first-term senator being elected to the presidency that most people did not know, but if you stayed patient, the market came back. And last, in 2004, we see a chart more similar to the first two in that the low point was election day. But once it was determined that Bush won, the stock market went up because the uncertainty goes away and the market hates uncertainty. So before we get into my stock tip, just a quick summary, my 3 reasons for why you should not sell your stocks due to the election. So point number 1, the stock market performs well no matter if a Democrat or Republican are in the Oval Office. Point number 2, the overall long-term trend of the market is up, so make sure you stay invested. And last, the year after an election is usually the best time for the stock market. Okay, so to wrap up the video, here is the stock I've been watching for the past 9 months. Stock ticker is OKE. So as you know, the energy sector has gotten demolished since COVID-19. You probably remember in April that oil futures actually went into negative territory until Trump stepped in to resolve the conflict between Russia and Saudi Arabia, flooding the market when the demand was just not there. So OKE is a natural gas play. They just released their Q3 earnings, and number 1, they beat their expectations on earnings per share, their EPS. Number 2, they stated natural gas liquid volumes are now back to pre-pandemic levels. And number 3, most importantly, they have not cut their dividend even with everything going on with the crisis. So you can see here at current price, OKE is paying a 12% dividend. So again, if you invest $10,000 at the end of the year, you will have earned $1,200, which is not bad. And last, you can see the 52-week high for the stock was $78. We are talking here about an $80 stock pre-COVID-19 that is now trading around $30. So even if the stock price stays flat, stick with it, collect that 12% dividend, and if the stock goes to $60, you've doubled your money. Again, I'm not a financial advisor. There are risks to investing. I just wanted to share my thoughts on this dividend play that I'm currently actually investing in myself. So I hope you enjoyed the video. Do me a favor, click the subscribe button, click the thumbs up to show me that you like the video. If you're interested, I have a step-by-step checklist if you are new to investing. It goes through the fundamentals and technical analysis for how to select and when to buy stocks. Also, I have other helpful videos like what to do when you get paid, as well as videos that provide my lessons learned over the years for how you can build wealth. Again, the goal of this channel is to share the mistakes I've made in the past so you can learn from these and not have to make the same mistakes that I made. So if you made it to the end, I really appreciate you. And remember, start today. You have nothing to lose, but everything to gain.